Let's get right into this model, which is again a simple, repeatable framework that you can use every single day or on most days to frame a move in the market. And it's really only 3 steps with 3 time frames. So the first time frame is the daily time frame, where we look for the previous day low or previous day high to be engaged and order paired. This essentially is an external range high or low. We then look on the hourly time frame for an internal retracement back into a discounted or premium PD array or internal range fair value gap. So if we are bearish and we've taken previous day high, we want to look for price to return back in to a discounted internal range bullish FVG, vice versa for longs. On the 15-minute then, we use this daily and hourly context to then frame the trade by looking for an SMT, a market structure shift, and shorting or longing above or below the midnight opening price, depending on if it's the previous day high or low that is rated. This is a repeatable model. Let's see if it actually works and get on a chart and see what we can find out. So let's look at last week on the NASDAQ. I've already done the first day, and when I say last week, I mean the 25th of March being Monday, not NFP week. So let's look at a previous day high and previous day low and see which one of these levels is engaged first. As you can see, we engage our previous day low first here on the daily chart. This is previous day low, previous day high. We now look to frame a move back into our hourly internal premium array. That is this premium SIBI in the market, and we now go down to the 15-minute chart to frame an entry. What we're looking for is a smart money technique between the ES, as we can see here, and the NASDAQ, a market structure shift, and we can engage this trade using a PD array of interest, in this case, this 15-minute bullish BISI. As you can see, this trade offers 2R and gives you a very clean setup that is almost directly in line with this tweet and this model. So let's move on to the next day. I'm going to delete these things just so we can have we have not too much on our chart going at the same time. So let's mark out again, previous day low and previous day high. Perfect. Once we've done that, the concepts and the mechanism for evaluating this are exactly the same. We look on the hourly chart to see if we can locate a discounted internal range that is in this dealing range. So we'll drag our Fibonacci from this previous day low to this newly created swing high and evaluate any hourly PD arrays, or internal range fair value gaps rather, below 50%. As you can see, from yesterday's or Monday's displacement, we create this hourly internal range, which is in a discount of this market. So let's mark that out as our hourly BISI. Now let's go to the 15-minute chart and evaluate if there's any entry that we are offered. Again, we're looking for an SMT. In addition to an SMT, what we're also trying to see is if there's a market structure shift and a PD array we can get involved in. With the ES, we can zoom in here and note we have this SMT. This high on NASDAQ takes out this previous high. Let's zoom in a bit further to make sure that's the correct SMT. Yep, so this high forms a higher high on NASDAQ. As we can see, this is a lower high to this high and these highs. So this is our SMT with ES. We now look for a market structure shift, which we can observe below this level right here. Let's mark that out. And now we can see we have this nice displacement and 15-minute internal range, or sell side imbalance, buy side inefficiency. Now, what is important to note with this model, we must be shorting above the midnight open. So let's take our true day open, locate that. I can use an indicator here, which should be able to show me our true day or New York open. As you can see, we're above that, and we want to be targeting this internal range liquidity. So we can enter somewhere in this gap. Let's say you want to choose this 15-minute CE. Could also potentially refine this on the 1-minute chart, but in this model, I choose not to. And now we want to target this internal range. Also, we can notice that there is an obvious liquidity pool that may be beneficial to target, which could be this swing low right here, or even this swing low here, offering between a 2R and a 2.5R trade, depending on where you take your position off. Again, just a beautiful 3-step model offered on this Tuesday. Let's move on to the next day. Let me play out some candles so we can see some price form. Do some on the hourly chart to just go through the whole day. Okay, perfect. So what we want to do for Wednesday's price action is evaluate the previous day low and the previous day high, and again, see which level we are keying off of. In addition to following this model directly step for step, I will also mark out this buy or sell side liquidity pool in the market, which we put in a failure swing to on Tuesday. So I will mark that out as our sell side liquidity. And we have an extra confluence of sweeping liquidity as well of this external range daily low, right? We form a intermediate term low with 2 shorter term lows to the right and to the left. So sweeping this may give us a strong reaction. Let's observe what happens on this day. Get rid of these. Again, our target for this is going to be an internal range premium fair value gap. So what we want to monitor is the dealing range from this high to this low. We want to search for any gap that exists in premium of this dealing range. Well, as you can see, we can have, let me actually extend this all the way out. Okay, and as you can see, we have this large displacement on the hourly. So let's mark out this entire fair value gap as a potential premium range to engage. I will also mark out this 50% mark with a dashed line so that we understand where the equilibrium of this range is in targeting. Now let's go down to the 15-minute using this equilibrium line, which we'll mark out in gold, and refine this area a bit further. I can see we have this unmitigated 15-minute inefficiency, so I will refine my hourly target, expecting a potential wick to this 15-minute gap that is unmitigated right above the premium range. So this here, I'll make a little bit darker, and that will be our target. Let's collapse that to the left and look for our conditions. So once we engage previous day low, we again want to see if we are forming any meaningful SMT, which we can see happens right between this low and this low. This is our SMT divergence or smart money technique. Now, once we observe this smart money technique on the ES and NASDAQ, I also will often consider the Dow. However, as ICT states himself, the NASDAQ and the S&P have the most positively correlated divergences, but I will be paying attention to Dow as well. So once I observe this SMT, I'm going to be looking for a market structure shift, which is classified as a candle body closure through a short-term high. As you can see, we have our market structure shift right here. Once we see this market structure shift, we have a nice displacement creating this imbalance. So once price trades back into this imbalance, I can go long. Again, we only want to be longing below the New York Open, which we can see we are. And I will be targeting from this long our point of interest, which is going to offer us, if we keep our stop loss, as a candle body closure through this first candle. For anyone who's seen my content before, you know I always mitigate my trades, or I secure my loss, right? And validate my thesis at a candle body closure through the first candle of a fair value gap. And in this case, I also have the extra confluence of my SMT. So my stop loss can be anywhere in this area as a candle body closure. Now, simply looking at price here, I can see something else that's quite interesting. I can see we form an accumulation in the market, which I'll mark out by this green box. Let's make this blue. This fair value gap we can make blue. Then I see a clear manipulation, and I'm expecting higher prices after rating both this previous day low and daily sell side liquidity. So given this thesis, I would also be expecting another SMT to form in the market. As you know, SMTs generally signify a change in the state of market delivery or phase delivery. Therefore, this manipulation should be ending with an SMT, and let's see if that's true. As you can see, this SMT forms, which gives me an additional confluence that my PD array here, despite being closed through, is a valid entry, And again, we get a quick distribution to our buy side target in the PM session. Another fantastic trade leveraging this model from the MMXMTrader. So now let's touch on the last day of this trading week because there is no trading on the Friday, which is going to be Thursday. Let's let the day play out. I'll go to the hourly chart again. Okay, let's mark out our previous day high and our previous day low and apply the same protocol. Previous day high is here, previous day low is right here. And as you can see, this Thursday does not offer a model entry for our trade. The day ends at 6 p.m., right? Or Sunday gaps up rather at 6 p.m., taking previous day high, and we could potentially look for the model formation on the Monday, which you can see we get into this discounted area of the chart, this hourly liquidity void. But on the Thursday, we do not get offered a trade. In fact, we are simply consolidating all day with very low probability trades on either side of the market. This is a type of market I wouldn't potentially look to engage with full size. As you notice, we key off of this hourly imbalance with our news driver, and we end up sweeping this buy side liquidity before returning back into the range and then gapping up on the Sunday. So that's the Twitter model taught by the MMXMTrader. As you can see, it's a simple, repeatable framework. 3 time frames, 3 unique conditions, and as you can see, it gives you several trades over the span of a week. Now, what I'll add is that I specifically look for this model to form when market conditions present something like this. As you can see, we are in an extended consolidation in this area, and therefore I can expect the previous day low and high of this range to offer a lack of displacement and a return back internal. Because the market is not trending, this is a fantastic model to use to still get high probability trades aligned with our internal to external, external to internal concepts taught in the first MMXMTrader course, which is really how the market books price. Compare this or juxtapose this with our previous price action during trending moves, for example, from this monthly internal to this monthly external, you can see that here we have clear bullish order flow and trend, and that is when this model would also have to be evaluated to see if it gives the same opportunities. However, now after backtesting, when I see markets like this start to emerge, consolidations, this model definitely holds its weight, and it's a fantastic, simple model to catch good trades. So what I'll do is I'll link my Twitter in the bio as well as my Discord if you want to ask me any questions. I usually am most active on my Discord because I get a lot of DMs, but my Twitter has several examples of this Twitter model, and I'm open to answering any questions you have, so leave them in the comments. Give me a like and subscribe if you appreciate the content, and yeah, I'll see you next time for the next video. Thanks, guys.